pleasure it is to be here, part of the Mumbai Tech Week with my young Turks. It's a large and growing community. We've been on the air for 22 years. It is not just India, but one of the world's longest running shows on startup and entrepreneurship. So I'm really, really glad that Young Turks is part of the Mumbai Tech Week. And thank you very much, the three of you, for taking time out to speak to us here today. So this is a post-lunch session. I know everyone's feeling a little bit like you need some time off for siesta. So I'm going to get straight to it. And Harsh, this is what your friend Gaurav Munjal has to say. And he tweeted saying, Mumbai and Delhi cannot become tech hubs. However much people try, Bangalore's network effects are too deep to be broken. Bangalore is the place to be if you're starting up. Don't even think about any other place. I'm going to give each one of you 1 minute to make an elevator pitch on why Mumbai is the new startup capital for India. Harsh.
Well, Mumbai builds value, not valuation. And we actually make money, right? So, but you know, I told Gaurav the same thing, that this is not a Bangalore versus Bombay thing, right? This is not a competition. We're all trying to push tech forward. I don't care, let Bangalore be first, let Bombay be second, I don't care. We're here to just say, Bombay's in the race. The unfortunate part, or fortunate part, is that I keep saying that Bombay is known for so many things. Bombay is a financial capital, we're Bollywood capital, we're real estate capital. So tech has to scream to be heard. And we're screaming. All these people are here, so we're screaming.
Guys, you can do a better job at screaming than that. Give Harsh what he's looking for. You did respond to Gaurav.
So you know what happened is, that day Gaurav was supposed to come to Bombay, but his flight got cancelled. So he was having a bad day. So just pardon that tweet, I would say. That has no real meaning to it, but on a serious note, and this actually happened.
You're not just making that up.
No, this is and because he was supposed to come over that night. Anyway, moving past, look, when we got together and started thinking about this problem statement that why are people saying there's no tech, there's no startups in Mumbai, we realized it's simply down to nobody has spoken about it. That's it. There is enough innovation, enough tech happening over here. All of us, and I've learned from a lot of my peers around here, we're too busy doing our business day to day. We're too busy going to office, getting stuff done, coming back, moving on. We don't have enough time to do founder dinners. We don't have enough time to be on Twitter and talk about valuation. No. Look, I mean, the reality is a lot of us just didn't think about it, right? We were too busy doing things. And that's where this organization came together to say, okay, look, that has to change because the founder or entrepreneur of tomorrow is not thinking the same way. They are looking and they are listening to whoever is screaming, whoever is speaking. So that is why we put this together. And the 5-second pitch for Mumbai would be, all things said and done, for a young person in their 20s, it is the highest quality of life and the safest place to live.
Okay. Well, I'm going to check with the audience if they bought what they've heard from Harsh and Aakrit so far. Yay for Mumbai?
Yeah.
Well done. Ashish?
This notion of tech and startups and digital India is so skewed because it's largely run by the newspaper in the morning, which talks about these billions of valuation and all of that. Isn't TCS a Bombay company? Isn't Tata a Bombay company? Isn't Ambani or Jio a Bombay company? They are massive digital platforms. And they recruit hundreds and thousands of jobs. They're creating tremendous value. And today, when you talk about startups or companies, I mean, look at Jio was created literally, a few years ago.
Yeah.
And if you look at the tech ecosystem, and that's what we're batting for, is the tech ecosystem. Today, every company needs to be an omni-channel company. Whether you're a brick and mortar or old school company, if you don't digitize, you perish. And companies like ours, if we don't have physical assets and we don't operate in the real world, you perish. And I think these two worlds will collide. And as you do more stuff in AI and things like that, I don't think it is the domain of one city or one region. And I think if there is no spread, then India suffers. Look at what happened with the resurgence to New York. The challenge was housing and pricing pressure, real estate and pricing pressure, infrastructure pressure.
Yeah.
I think with guys like this gentleman sitting in front, MMRDA, and a whole bunch of folks, I mean, look at the work that is happening today, the number of roads that are being built, look at the metro, the connectivity. I think this city is going to get very, very livable, very affordable, and I think that's going to make a big change in everything that we're attempting to do. It's still, there's a lag and lead effect. It's still in a year and a half, 2 years, till we see the fruit of that, but you can see the change. I mean, Bangalore doesn't have a convention center like that. Where do you host it? So, and it's the truth. You come out from the airport and it'll take you 2.5 years.
Yes, we can ask Trevor Noah that, can't
Sorry,
we?
exactly. We bore the brunt of that. So, never again. So, I'm saying that, and Bangalore will catch up, right? They will invest in infrastructure, but they are now 10 years behind. Delhi was 10 years ahead. Now Bombay has caught up, and I think it's going to build better infrastructure. So I think it's good to have this competitive streak, and India wins.
Well, absolutely. And let's take that point forward about India winning, and the Delhi versus Bangalore versus Mumbai debate is over and done with. Ashish, let me start by asking you that question, because as you said, you've been around the block, and you've been around the block for over 2 decades now. What do you believe is the most significant change that you see today on why you believe this is the best time for people to consider starting up in India?
Look, the analogy that I use is from Formula One. If you've seen the race, you'll see the car ahead is, powering on and is burning up a lot more fuel and energy than the car who's sitting in the slipstream behind, and probably using 20% less energy. And when you have a straight course, you press the DRS and the guy always overtakes the other guy, right? You need other people to push and show the way. I think Book My Show was 10 years before our time. 1999 was probably not the right time. There was no UPI. No digital payments, there was no mobile payments, there was no online connectivity. I mean, we were a call center based company with home delivery on COD, which we swore we'll never do again, right? And cut to the period today, you've got Aadhaar unique identification, money is flowing from London of India to United Kingdom of India to Brazil of India, and now even Africa of India. So you can now cater to a much wider audience and a much bigger paying capacity. You've got mobile, which powers and democratizes information. So I think the arbitrage has disappeared. And so it forces you to become more and more efficient. And then at the top end of the funnel, you've got this discerning young demographic in India, which is willing to spend on experiences in anything, as long as it's at a global standard. So I think coupled with all of this ecosystem, and then you've got, in my world at least, you've got OTT platforms, you've got streaming platforms. Just yesterday I was saying that Spotify has 80 million customers in India, or subscribers. And by virtue of that, 3 Indian diaspora artists are always on the global top 50. The moment this hits 120, it'll become 5 to 6. The moment it becomes 200, which is inevitable, will be 14 to 15. That's your K-pop moment. That's your Afrobeats moment for India.
Harsh, let's address this consumption boom that everybody's talking about, that everyone's betting on, including you, and the kind of proliferation that we've seen as far as online gaming is concerned. What are we talking about now in terms of numbers? And the real money side is a different story, because that's been hit by regulatory challenges. But outside of that, what is the true potential over the next 5 years for an industry like yours?
Yeah, I think, we're all here in Mumbai, and we talk about Mumbai, Bangalore, Delhi, but we don't realize we're all like in a little bit of a bubble. And speaking of Trevor Noah and Veer Das, right? He said we live in a tale of two Indias, right?
Yes.
This is exactly what we see with our data. That we can all be here thinking football is the next big thing, right? My kids play football. We're all following, like I'm a big Manchester United fan. But Bharat is what we're actually building for. And Bharat follows cricket, follows kabaddi, follows hockey. So what I'm saying is that when we look at our data, even we're astounded by the proliferation of internet that is spread across India now.
Yeah.
It is no longer an India that is that, the Ken, I think, calls it the California Indian user, right? But we're actually, I don't agree. We have signed up, like at Dream 11, we have signed up 55 million new users last year alone, right? We have 220 million users for 16 years. We've been running this for 16 years. In 15 years, we got to 150 million. And in 1 year, we get to 55 more million users. This is, we looked at the data and we saw that 72% of our users come from outside the top 100 cities of India. And so this is Bharat we're dealing with. The way internet is being used, you know, all of us will be on our phones. I went for a movie last night. I went for Fighter on Book My Show. And we're like, you know, what do we do in the night? What do we do? We have the same like 5-10 places to go, a club or a movie or entertainment. Yeah. But for the rest of Bharat, the phone is your entire universe, is your access point to the whole world. Yeah. And they're using it amazingly. And gaming happens to be one of the places which is the easiest to pick up and start using. So we're seeing gaming being used by the young Indian Gen Z population like none other. I think that we'll easily get to around 500 to 600 million gamers in India, online gamers in India in the next couple of years.
At this point in time, any conversation that you have, whether it's in this country or outside, is dominated by AI. It's almost as if AI is the miracle cure for everything that challenges us as people on this planet today. But one of the conversations that I had with Satya Nadella a couple of weeks ago while he was in India, and this was interesting because he said that he's seen 4 tech paradigm shifts, and he believes that this is one where India is not lagging behind the rest of the world. There is parity between what is happening in India and what's happening in the rest of the world. How do you see the AI opportunity as an advantage for India, if at all?
You know, I had the fortune of also meeting Satya when he was here around a similar conversation. And, you know, it was so fascinating, some of the data that they shared with us and what we are seeing. 1 out of every 4 AI-related code deposits in GitHub globally comes from India.
Yeah.
That is just amazing. 25% of the code that's being written is being written over here. Every 6th researcher in AI in the world is Indian. So if you just take these 2 data points, and if you think about AI as being the place where foundational models will be created by great talent, we are absolutely this time together with, let's say, the US or Silicon Valley when it comes to development of this technology. What's also fascinating is, Shereen, and something that we've been thinking about a lot amongst the work that we do at Haptic and even by extension at Geo, is the impact of AI to India and to India first problems. If you think about, and you know, Khan Academy built the AI tutor. Imagine the power of that in India, where, you know, there is a large percentage of the population that doesn't even have accessibility to education. But something like this could just make you teach on a phone by just, you know, interfacing with the natural UI. Agriculture, there's 2 or 3 phenomenal startups who are building AI tools for farmers who can do real-time crop detection. So just those use cases itself, you know, we're talking about entertainment Bharat, but this is like citizen-first services is where I think the power of AI we'll first start seeing in the next few months.
Today, what you're seeing is India problems being addressed, and also Indian startups looking at going global and very sort of legitimate large global ambitions and aspirations. As you look at where things are today, capital was not a constraint. At least in the previous 5 to 7 years, money was easy, interest rates were rock bottom. That's changed. How is that likely to impact ambition, aspiration, scale, and size going forward?
Money was too easy. That was the problem. I think in terms of the ecosystem change, I think money was, I kept saying this for many years, and I think it wasn't taken seriously, that more companies die out of indigestion than starvation. And I think...
We're seeing that currently play out.
Look, I think today with the money that's in the market, there is a little more intelligence behind that, where people are asking some real hard questions.
Are they?
I think so. They are a little more circumspect. Earlier it was growth at any cost, GMV, run on a treadmill, acquire at any cost. I think suddenly somebody has woken up and said, hey, you know, there's a thing called a bottom line, and there's a thing called an EBITDA, and there's a thing called PAT. And you know what? We shouldn't talk about adjusted EBITDAs. And now there's no adjustments anymore, right? And you've stopped seeing that narrative.
Adjusted EBITDA is still being used by all of you guys in the startup ecosystem.
Not in Bombay.
Not the Bombay companies.
Not the Bombay companies.
Not the Bombay companies.
Here we talk about FCF.
We spoke about
Free
this.
cash flow.
You will have no adjusted
Free
EBITDA.
cash flow, that's what we're going to talk about, is it?
So I think that change that has come through is also the quality and the kind of money that's coming in today. There's a lot of activity at the bottom end, which is really early, startup, maybe not so much on the angel side, but first checks are now there's activity building up again.
Yeah.
And then that middle layer has disappeared. Then it's the big checks, right? It's checks which are 250 million and plus, where there is stability, growth, impact, there's predictability, and then how can you be helpful in scaling this up 4x, 5x, 10x from where you are. And then there's new tech, right, which is path breaking. And then again over there, it's really, really high risk, but it's high performance. It's go big or fail, and there's investments there. So I think even with the entrepreneurs that are coming in, there is a lot more. This separation of wheat and chaff is happening. There's churn, which is good for the market.
Yeah.
These cycles, you've seen this enough in business, that these cycles are actually good for you. These 7-year, 10-year cycles are really good. I remember in my career, the first 10 years from 1999 to 2009, we've spoken and everybody said India will go the US way. The next 10 years was India will go the China way. We didn't go either of the two ways. And now everybody's talking India will go the Bharat way, which is probably the right thing to do, because India would always go the India way. And I think it's that figuring that model out and where the money should go and what problems will you solve and who are the kind of founders that you want to bet on. I think there's a little bit more stability and really good growth spurts that I can see in that area, which is a lot of the cleaning up which should have happened a while back.
You know, you're talking about stability, and Harsh, you would certainly like to see stability as far as the tax regime is concerned. But let's address this issue, because it's not just impacting your business, but I think there is a larger regulatory issue that is a challenge for a lot of sectors in the startup ecosystem today. I remember I think it was 2021, where you said that the regulatory moat was actually advantage for a company like yours, and it's now the albatross around your neck with the 28% GST and demand notices running into thousands and thousands of crores. How do you deal with that? And more importantly, this moat which is now turned into a disadvantage, what does it mean for the business going forward?
Yeah, so, I think India as a tech industry, as a tech nation, is catching up, right? And I think there's going to be a lot of nascency in many sectors which are unregulated, where we're disrupting things. Once it becomes large enough, then the government steps in to regulate it. And I think that there are those couple of years where we've seen, whether it's in taxi, ride sharing, whether it's e-commerce, whether it's, digital commerce now, we'll see that there are a couple of years where the government steps in and regulates. And those are painful. I'm not hiding behind the fact that, obviously as an unregulated disruptor, you can grow much faster. But I think it's great that the government is stepping in, because there comes a time where too many people start doing too many crazy things in the name of disruption.
Yeah.
And I think the gaming industry went from like 10 gaming companies to 500 gaming companies in a few years. And so I think it's great that a regulator is coming. Yes, of course, there's a lot of pain for us as we go from an unregulated to a regulated environment. But I've come out publicly to say that the government has increased GST by triple, prospectively as of October 1st for us. And now the government has come out publicly as well, stating that they're going to get almost $1.5 billion of GST a year from gaming.
Yeah.
I think that's great. I think that as long as the larger gaming companies are not dying, we're now moving to a regulated entity, black and white, approved by the government. And I hope that's great for the sector. Retrospective GST, we are fighting in court. And I hope that gets resolved. But once that does, amicably, in some way,
in some way.
in some way, shape, form, then, I think there's a lot of headroom for growth for the industry. So, yeah.
So Shereen, I have an exactly opposite sort of experience, and Harsh and I have discussed this a lot, and we obviously chat as friends. We were done in the pandemic. Book My Show, we had gone down to zero, right?
Yeah.
We had no revenue. We worked with the government during the pandemic with the GST Council. In fact, e-tax, you had gone from 28% to 48% and 45%. Yeah, 45%. And what happened with e-tax, they brought it down to 28% as a part of GST. But in the pandemic, when we worked with the GST Council and the FinMin, they actually brought down on live events GST, and they saw a point to 18%. And it's zero below tickets of 500 rupees. And now we're working with them to do a staggered of 0, 12 and 18.
Yeah.
So we've had an exactly opposite sort of experience where they saw logic in the reason on why it builds tourism, hotels, airlines, all of that.
Aakrit, let me ask you this. In terms of consolidation now, do you see as we move forward, and especially that middle that is feeling particularly vulnerable at this point in time, do you see consolidation on account of investors putting pressure or an existential need to actually consolidate, whether it's within the startups themselves or large companies coming in and doing M&A?
Yeah, so look, great question. And I'll maybe start with what Ashish ended. And to your question, I think when you think about capital or venture investing, the earliest stage, I don't think much has changed from the last couple of years. I think it continues to be fairly aggressive. I think we have not learned some of the mistakes on the early stage side. There's still all types of investing happening. And exactly to Ashish's point, the stage after that, that's disappeared, right? The mid stage of investing. And then there are late checks available for solid companies. I think this time what's going to happen is a lot of the middle stage companies will either become what we call zombies, who just remain in existence, fighting month on month. Or I actually think, unlike previous cycles when there were forced M&As, I don't think people are going to go through that this time. I feel like investors will think about their biggest assets and think about maximizing that value instead of trying to see where smaller assets fit in. And then there's definitely going to be, Shereen, a few types of companies, even in the middle stage, who will break out and then go to the next stage. Those are the ones who will clean up their act and move forward. So I think it's either zombies, there's going to be a lot of deaths in the coming few months, or, I think some good companies get created. But I don't think, unlike the last cycle, there's going to be a bunch of, okay, look, I own equity here, let's try and make everybody meet.
Yeah. Ashish, hemrajani, Aakrit and Harsh, many, many thanks. We wish the three of you the very best of luck with your plans for your individual businesses, your individual companies, and for team as well. Ladies and gentlemen, thank you so much for joining us here this afternoon. Thank you.